As usual on a Tuesday, Jameel Ahmad, Global Head of Currency Strategy at FXTM, and Martin Strauss, Director at Shena Johannesburg, joining us as we get to grips with the market. Jameel, that Brexit deal, I think we're all prepared for a no deal now, and that seems to have impacted the currency somewhat.
Absolutely. It's been another very chaotic start of the week when it comes to political risk really impacting markets. We've got the Brexit, China-US trade tensions, the resignation of the central bank governor of India, and you've also got this current unrest that's going on in France that's starting to have some sort of impact on markets as well. But of course, main headline yesterday was Brexit, and Theresa May spectacularly pulled the key UK vote for today, which has really heightened expectations that the UK's either fallen into a disorderly Brexit trap, or they're starting to prepare for a no-deal Brexit. But either circumstances, it doesn't look good for the pound at this point, and we saw the British pound fall to its lowest level since April 2017, just yesterday evening.
Yeah, it seems to have been a case, however, of global unease and global unrest, so to speak, really. Even the good news, or news that is supposed to be good for us, is still bad in general by the seams of things. Everything just seems to be culminating. You have France happening at the same time with those protests. Yeah, you have obviously Brexit itself. The United States, Donald Trump, even this morning, sources saying that he is a little fearful of the Democrats taking over the Senate headed into next year, which is a bit jittery for him. Oil prices themselves are a bit of a scare, considering what OPEC did even last week. A whole host of things just coming together here, and it seems like the perfect storm.
It is very much that way, because what you've just mentioned again is a lot of political risk is impacting markets and the economy more and more now, and it's actually overshadowing some of the more beneficial parts of good economic data that are coming through. Everybody's preparing for a weaker year of global growth in 2019, but the major problem is that these challenges can't really be taken head on because everybody's focused on this political risk front, because it's very unpredictable. It's still impacting financial markets in a way that it wouldn't have done a few years ago. And you don't have any clear foresight on what's going to happen with the China and US trade tensions, which again is the biggest risk to the global economy, global markets since the financial crisis of 2007. I can't stress that enough. But when you have the news that they've made a truce, and then just 2 days later there's a tweet on a social media feed that kind of really dismays the conviction of that truce, and now you've got markets into a panic once again, which means that it's obviously bad news for your South African rand as well.
Yeah. Do we continue then to perhaps maintain the faith that things can get, seemingly better? At some point, South Africa's rand was at around 13.50 against the US dollar. That was just last week. And now we're sitting back at nearly a rand more than that now. 14.45 odd was the worst figure yesterday around 6 p.m. Today, 14.36. Can we get some a slightly better picture?
We can, but we have to rely on the international political front starting to become a little bit less risky. And this is the biggest problem, because there's a lot, you mentioned a perfect storm, there's a lot of different risks that are out there which are now impacting financial markets that might appear very geographically isolated from any of these problems. It's not only the rand, a lot of different emerging market currencies, actually globally all emerging market currencies as of this morning remain weaker against the US dollar year to date, which goes to say a lot how this political risk in a lot of different international markets is impacting your market, in particular in South Africa. Until we really see that conviction that US and China trade tensions are really going to subside, they're hoping to make a long-standing solution to these prolonged concerns. It's not going to be positive for any emerging market nor the emerging market currencies. And again, if there was conviction over the trade truce following the G20, which basically means that a social media tweet shouldn't have gone out there, this panic in the market 1 week later wouldn't have happened.